Hey, good morning, traders and investors, and welcome back to the Trading Analysis Wednesday live stream show. I'm your host, Bennett Tyndall. Thank you all for taking time out of your busy Wednesday mornings to join us, and happy September 7th. Summer is officially over. I hope you guys had some, or got out and enjoyed the summer, had some good times out with the family. It's been quite the interesting summer in the markets, as you know. We continue to move lower following the breach of uptrend invalidation, which we discussed last week. We'll talk about that when we get to the charts in just a few minutes. Before we get to the charts, we're going to go ahead and bring in the trading analysis team. We've got a good show in store for you this morning. Good morning, Terry, and good morning, Alex. How are you guys doing today?
Good morning, guys.
Welcome, welcome.
Hey, guys. Good
What's
morning.
up, Alex? How are things in your neck of the woods? You enjoying the crypto volatility?
Yeah, I mean, it threatens some levels. We've been looking with our members. It starts to behave a little bit dicey. Fortunately, we have warned 2 weeks ago on a possible event, so we are ready for anything market prepared for us. So, yeah,
Very good.
I'm trying to pair that with your wave counts on the stocks. Any kind of, for now, you can see that bet. I just think that the CPI next week will be one of the possibly determination factors.
Yep. Very eager to see how that report comes in. And as you mentioned regarding crypto and the volatility that we've seen and the warning that you did have for our clients, you know, it's really interesting to see the way in which the crypto markets sold off into support. We met the support zone that we had anticipated would end the correction. That zone did yield an upside bid for quite a while. And we continued to hold that zone, but as you mentioned, it does look to be challenging it quite significantly over the past 24 to 48 hours. So, of course, we have Crypto Lab tomorrow morning, 9 a.m. right here on this channel. Alex will take you through that. Anything else of interest before we get started this morning, gentlemen?
Well, I'm looking forward to see your latest charts. It seems that we are going into your direction in a sense of a possible X wave. You know what was a question? You know that usually the X wave goes to the previous B wave swing highs.
Yep.
That was a question mark for me. It's not necessarily just like a rule, but it's just in many cases I have seen this B wave tested with this sharp X wave. A possibility, but it seems we don't have a strength for that, at least in the current environment.
Yeah, we faded pretty significantly from the August 16th high, but to your point, it is interesting to see that guideline, fail to be met. We're continuing to look at this as WXYXZ. We're going to get to the charts in just a few minutes. Terry, anything specific you would like me to cover?
No, I think you're going to cover whatever you cover, Bennett. It's going to be all good.
All right, sounds good. Well, let's hit it. We'll take you through the charts. We'll be back on the other side, take you through macro as well as sector rotation, and we'll go from there. If you have any specific requests for me, feel free to drop them in the chat. And gentlemen, we'll see you on the other side. Catch you in just a few minutes. All right, let's hit it. We're going to go hard right edge of the MotiveWave platform, the trading analysis edition of the MotiveWave platform. First, taking a look at price action in the S&P 500, and we are most certainly reviewing the dreaded triple combo, which is a very unusual correction. In fact, the most recent example that I have for a WXYXZ development actually is found in the stock of AMD. And looking to the stock of AMD, going all the way back to the high and resistance from February of 2017. This is where we see AMD enter a very sideways triple combination correction, which is best decomposed as a WXYXZ triple combo. You'll see that this finished in April of 2018, and this does take us back to the discussion that we had with company founder Todd Gordon in regards to degree violations and what is of more significance, duration or magnitude. And personally, I favor more often than not duration over magnitude, and I think this is this chart, the chart of AMD, is a really good example to that effect. Here we can see going back to 2015, which if you take a look at when Lisa, AMD CEO, came on, it was very well timed, and short of that, I don't think we would have seen the fundamental changes of the company to substantiate such a significant upside bid. But 5 waves up gave way to a very long, shallow sideways consolidation. I remember Terry and I tracking this in 2018 at the 9 handle, looking for a breakout to 60. And then after we break out of wave 2, we see the wave, or excuse me, out of wave 2, we rally in wave 1 of higher 3. And then if you'll notice here, this correction ends up being 53%, whereas the parent wave was 41%. But the parent wave was much longer in duration. But it's a really good example of the WXYXZ triple combo. So keep that in mind as we go back to the S&P 500. And I will acknowledge and admit the fact that it is a very rare pattern development. It's a bit unusual, but we've been in a bit of an unusual market environment with many variables. We had the geopolitical escalations with Russia and Ukraine. We had inflation. We had the Fed. So a lot for markets to digest. And as a result, I do think it's possible that we, in a complex environment, print a complex correction. So looking at price action in the S&P 500, my preferred view of the S&P suggests that investors, traders have capitulated for new lows into 22, so for the year. And looking at this pattern, we've been identifying it as a WXYXZ. Now, Alex, I'm not counting this rather as ABC down. I'm actually counting this as WXYXZ. I really believe the May 12th through June 2nd progression to be a flat, where we have 3 up of in A, 3 down in B to the 1272. The C wave was an exact 1272. So that suggests that we have a 3-wave sequence between March 29th and June 16th. So now, as you know, and as we discussed about a month ago, coming out of the August 16th area high, which we were able to identify as the end of this upside bid, coming out of that, we were looking at price action off of the June lows as either an ABC rally, or alternatively, we knew that this could have proven to be up in 1, down in 2, up in 3, down in 4, and then up in 5. The impulsive invalidation level was met at 39.45 spot 86. And now if I move you lower in the time frame scale down to the 20-minute chart, here we can see a better look at price developments from the June lows into the August high. So we rallied for about a month, June 17th through August 16th, and finished wave 5 with an ending diagonal, and we have since breached what would be impulsive uptrend invalidation. So I do feel that we are moving lower in another impulsive trend. I see this as down in 1, back into down in 3. The rally into last Friday took us right up into the 38.2% retracement of the wave 3 decline. It is worth acknowledging that there are a couple of possibilities in terms of how this final wave orange 5 plays out. Possibility number 1 would suggest that orange wave 4 is actually still an ongoing ordeal. Based on time elapsed in wave 2, that is supported, and that would suggest that yesterday's move down was simply wave B of wave 4. We could possibly rally all the way back into Friday's resistance and then turn lower. If we don't hold a bid and rally back, that's when I would be comfortable anchoring the orange wave 4, and that means that orange 5 is going to unfold as kind of a meandering ending diagonal or potentially a motive impulsive wave of its own. Downside objectives for me personally begin to come in between 38.29 and 38.18. You'll notice this price level with multiple swing wave lows and high going back to June. In addition to that, we have our orange 5 and 1 equality, which is very common when you have an extended third wave. And although we were short of the 1.618 relationship of orange 3 compared to orange 1, I would count that as an extended subdivision. So that puts us moving lower to 38.39 to 38.27, maybe 38.18. If for some reason we violate that zone, we could move down to 37.71. And then from there, I think the bigger development that ultimately sets in is going to be the wave B retracement. So all I'm looking for in the index is is another three-wave progression to the downside to satisfy the triple combo. In the event the B wave retracement yields a decline in wave C that is met with acceleration instead of divergence relative to A, and let's say that acceleration is also then met with a breach of very key support levels, that's when we need to step back and acknowledge the possibility that we are not smarter than the market and that we may be up against rather the more significant cycle or super cycle degree top. This is a possibility that is not lost on me as a trader. In fact, it was June of last year that we were able to use this chart to suggest that the Nasdaq may run into trouble near 16,000. And if this is the case, that puts price action from the all-time high in the case of the Nasdaq down in a motive wave, which I got to hit the pause button here because currently, and as you know, motive developments, be it motive impulsive or motive diagonal developments, they start trends and they end trends. So if we're seeing a motive impulse or motive diagonal, it doesn't matter which motive wave. If we're seeing a motive trend establishing development from an all-time high in an index, then we need to pay attention. And as we reviewed 2 or 3 weeks ago, 3 of the 4 major US market indexes support the idea that we do have a motive wave down. Russell 2000 small caps, Nasdaq 100, and the Dow Jones Industrial. The S&P 500, per Robert Prechter's Elliott Wave Principle Handbook and what has been accepted as the rules and guidelines of Elliott, is technically not valid. But perhaps this is an instance where we look back in hindsight and say that was, in fact, a valid motive sequence off of the high in the S&P. So 3 of 4 indexes say this could be a trend establishing ordeal. If it's a trend establishing ordeal, and if we see acceleration after that B wave retracement that I just showed you in the S&P, that's when I would begin to consider the more bearish possibility that you see here in front of you, which takes into consideration price action of the Nasdaq back to its inception in 85, 5 waves up into the dot-com high, down in wave 2, smaller 1, 2. From the blue wave 2 in 2008, the 16K handle that we used and outlined as potential resistance included the blue degree of trend, so the blue 3 versus 1, 261% relationship, and then inside of blue 3, the 5 versus 1 equality. The market did not like that level. And what's really fascinating about the way that we have reacted from that zone is if you take a look at this base trend channel, which takes into consideration 2002 through 2008 with your parallel trend line over the dot-com highs, look where the pre-COVID sell-off in the Nasdaq ran into resistance. You see this little red squiggly line? That represents the upper boundary of that base trend channel. Then we rally back up into resistance. We fade back into the 22 sell-off, and now we are trying to turn the upper boundary of the base trend channel into support. The issue became, now we're going to move all the way off of the monthly and we're going to just focus in on this move. The issue became, down here on the daily, all the Nasdaq was able to do was rally back into downtrend resistance. And here you can see that 16 to that 5V1 and 2618 and the way the market reacted to it. All we did after bouncing at that base channel is rally back into downtrend resistance and then fade. So this is what we need to be aware of and at least acknowledge as a possibility in the event plan A does not go our way. We see acceleration or we're met with an unexpected catalyst to the downside. And then the last piece before I wrap up, what's even more fascinating, unfortunately, about this chart is when we use the 1-3-2 channeling technique, which, by the way, is part of Ralph Nelson Elliott's original wave principle. His original wave principle utilized this channeling technique to help find wave 4 support. And what it entails and what you do is take the high of wave 1, you draw a trend line from the high of 1 through the high of 3, you then project the parallel channel, mirroring that over the low of 2. And if we were to project a quality of C compared to A in this wave count, and draw C to the 100% relationship to A, it takes us right to that channel. And that would say the Nasdaq is on its way to 9K. Not my preferred view. Not my preferred view. My preferred view for the time being still says that this is some sort of a complex consolidation, this overall correction should yield new highs in the indexes, and then we'll have that much larger correction be technically possible. Last up, for one of our favorite fans, I'll hit the Russell 2000. Here in the Russell 2000, we had a really nice corrective pattern. You had 3 down, 3 up, 3 down. Every time you met the corrective trend channel, you bounced. Every time you met a quality of Y compared to W, you bounced. Your Y wave was equal in price and time to your W wave. Very symmetrical overall move. And then we did the same thing, up in 1, down in 2, or up in A, down in B, up in C. We breached invalidation, looking impulsive on the downside, which opens up the idea that maybe we do have a valid leading diagonal of the contracting variety down, an ABC wave 2 up, or maybe this is just a big AB structure. So that's it from me. Let's jump back over to the trading analysis team. I've taken far too much time. What do you guys think? WXYXZ, or are we going to 9,000 in the Nasdaq? Am I crazy?
We'll get there someday.
It's possible. Go ahead, Alex.
Yeah, definitely needs to have that option open. I mean, it's still not time to go to primary solution, because simply where the S&P will go if Nasdaq goes to 9,000. So
yeah, and that's one of the issues. You bring up a great point, pairing up that wave count in the other indexes, which is why it hasn't been my preferred. And even though we got to that 16K zone that we had mapped out a year in advance, we couldn't substantiate that being the top, and we still have a difficult time doing so. So don't get me wrong, I'm still optimistic, and I still think the next series of lows in the major indexes should present an entry opportunity. All right, Alex, Terry, do you want to run first, or do you want to switch it up? Your call.
Let Alex go first this time. We'll switch it up.
All right, Alex, I'm going to pass you presenter mode right this second. It's coming your direction now. He'll take you through the macro scene. After that, Terry will take you through sector rotation, which is a really key topic in my opinion, especially if we're going to be considering the more bearish possibility. So Alex, take it away, and we'll see you on the other side.
Hey guys, just move a little bit of, I think we need to readjust this a little bit. So let's move over the macro events and current macro picture. So if we examine the current Fed meeting probability on the CME Fed tool, we clearly see that for 21st September, we are now well advanced for a 75 basis point move. Market anticipates that, although we might see changes there. Very important CPI readings will be next week, so pay attention to that. And this also can switch, but most likely, even if we get a CPI not substantially lower from the last reading of 8.5, we might still be on for the 75 basis points. I again think that 2nd of November will be a pretty interesting one post the 21st September Fed meeting. Now you clearly see that the pause again rised to 16.9%. It was very close to 3% last week. So now market now is pricing 78.5% for a small move on the upside, and then this going into direction of 3.75, 4%, decreased down to 4.8%. So very interesting changes how the market anticipate the 2nd of November meeting. And this goes in alignment with our charts. Our thesis was that we are actually in this last fifth move development, that we are going to see a substantial correction, either a bigger or smaller one down to 2.8, bigger one it goes significantly lower. So I pointed out that we have substantially high readings on these monthly levels in the RSI, highest in the history that we have here on TradingView from 1981. which is already diverging, let alone weekly divergence. So I do think we are coming lower. The question is how big of the magnitude that move down will actually be. If we look also the European one, ECB is tomorrow. So we do see rates going higher. The question is how much the ECB will actually increase the rates. I don't think they have such a large capacity that actually the Federal Reserve has. In the US, because of the current situation, Russia is actually cutting the supply of gas. I mean, it's starting to look like a big mess. Europeans now are voting to limit the price of the oil. Actually, for which price they're willing to buy oil from Russia, and Russia, of course, it's announcing it's going to cut even the oil supply. So things are getting heated much. In this respect, anyhow, this clearly says that our wave 4 was justified in testing of this channel, and we are looking impulsive move in this orange wave 3, which is going to be a primary wave 3 for this development. So we have a wave 4 and wave 5 before we see some corrective pullback, and this actually goes with a little bit of lag. How the rates are moving into the United States. So if we switch to dollar, I'm still holding the view that the dollar is closing the terminal levels of a possible bigger or smaller correction, which we can pair with rates as well. I see a very strong resistance levels between 114 and 116. I do think that we are not going to reach 120. Which is most viewed as a next resistance. I think this obstacle is pretty big in my view, and I think we're gonna start moving down, looking all other charts in the US dollar. So let's look and revisit our Thomson Reuters commodity index, which is working according to our charts. We identified a 5-wave move clearly. A very nice pattern, very clear pattern in the Elliott wave sense, and we are developing a corrective feature here in ABC down, or we are going to go a little bit more complex. This is left to be seen, but all commodity spectrums are moving lower. So oil is moving lower. If we look, the gas still holds this 1618. So I'm still juggling regarding actually anchoring this wave 3 and looking for a wave 4. If we look also corn, which is in a B wave corrective pullback, if we look copper, which is going lower, if we look also wheat, which is substantially lower from the February prices, and if we look soybean, which also depicts some type of a corrective pullback, obviously commodity prices are lower, which is going to be reflected in the CPI price. So I do think from that perspective, we are going to slow down in the Fed narrative of pursuing aggressively rates higher. So let's move and look what's going on the metal side. Let's check in what's going on with the silver and gold. Gold actually didn't give us what we wanted. We still don't have a full wave count invalidation level. We are trading into a very dangerous zone, very close to the previous low. So if we invalidate that, we will have to look for a different wave count. We didn't get a larger degree confirmation that the larger trend on the upside is still starting, and that's why I usually insist to wait before we see some confirmation before putting any viable or calculated trades in any of these scenarios. So we are still looking gold if dollar reverses, because I think this is connected pretty much with dollar. Also, it is very interesting that Russia is pushing actually to start quoting gold prices outside of the COMEX. So that will be also an interesting development. There is also news that a Russian central bank is announcing a possibility of accepting cryptos for trade purposes, which is also one of the very interesting notion and news. So we are going to see what is going to happen, but if we look this chart, we don't have a clear confirmation yet for the reversal in gold higher. Also, the same goes for silver. Silver is still trying to find a viable lows. One of the targets I have is between 15 and 16. That has to pair up with the dollar reversal. This wave count is still alive. We are not trading currently into a danger zone if we look these lows here. So still we have this as a wave A or 1, down in A, up in B, and we are looking for a potential 5 waves down in C. And of course, a confirmation of the possible reversal, which needs to test this swing high. So as long as we don't see a 5-wave development from any of these proposed lows testing this previous swing high, we can actually we cannot say we have a viable signal for a possible trade in silver on the upside. So that's from me, guys. Back to you.
Very good. Much appreciated, Alex. Another thought on silver is that it's just a WXY, and instead of that orange 4 being orange 4, maybe it's a B wave, and we're going to do 5 down in C. But regardless, the implications of that are pretty much the same, as is the support zone. So good stuff. Good stuff.
What is good with Elliott wave when you are dealing with corrections and you are faced with a couple of kind of different interpretation in a sense, is it ABC or WXY? Usually, if this is a corrective move, just the directionality of that move matters. Otherwise, the targets for a possible lows are usually the same when you paired up with fib ratio. So that's why the Elliott wave is pretty handy when you are dealing with corrections, because no matter how you interpret, some of the fib levels needs to hold, and you need to see a confirmation.
Yep, absolutely, absolutely. Generally, with multiple wave counts pointing in the same direction, it also increases your conviction level.
Exactly. Yeah.
Quick comment on the chat. There was a question regarding the invalidation level being breached in the indexes, the uptrend invalidation level. I do believe that markets are trading for new lows. I do, however, feel the next most logical and most favorable short opportunity will come once this 5-wave move down from the 16th of August completes. Let some sort of a retracement play out. I personally wouldn't trade the retracement itself, as depth and duration is unknown, but it will be within that 3-wave sequence that one should have the opportunity to position for a break of the June lows. All right, Mr. Terry Long, you ready to rock, sir? I got your screen up and ready to go. All right, let's hit it. We'll be back on the other side to wrap up, and we'll go from there. Markets open in about 3 minutes. All right, take it away, Terry.
All right. Hello, traders and investors. I'm Terry Long at tradinganalysis.com here with your weekly sector focus. Now, I hope everyone enjoyed their Labor Day weekend. U.S. markets were closed Monday, so now we have an abbreviated trading week to follow. Now, first, looking back here at last week, we had all 11 sectors moving lower. The S&P netted a 3.29% loss on the week. But overall, the month of August, the S&P declined 4.4%. So the rally up the middle of the month and then the correction back towards the end of the month netted us a 4.4% decline. The Nasdaq, the NDX last week, down 4.02%, with technology and materials down here. Real estate were the worst performing sectors last week. Now, the Nasdaq here, just one more thing, declined 5.4% in August. Again, it also had a rally mid-month, and then we basically retraced most of that and then given back another 5%. For the week, though, let's fast forward to, we just have the 1 day's worth of price action with Monday holiday there. Let me pull this out there and show you. Got a little bit of pre-market action coming in here, with real estate getting a bit of a bid, up 0.99. I think it was only up about 0.85 earlier this morning when I took my notes. And I didn't see the healthcare sector posting positive yesterday. Yesterday, the healthcare sector was still negative. So not much action. It's really kind of quiet. We've got energy still to the downside, about 3.2%. Crude oil back down to $86 a barrel. And net yesterday down 0.41 for the S&P, down 0.72 for the NDX. So despite the negative price action in the technology sector last week, it remains in an outperforming condition relative to the benchmark S&P. However, we can see here that the vector is turned yellow, indicating a weakening weekly price trend. Now, coming in behind the technology sector, the consumer discretionary sector has remained on an easterly track with continued gains in relative strength. And look, from Friday till now, we've actually got a push. We've got the vector, the consumer discretionary, now joining the technology sector here in the leading quadrant. And it looks to be continuing to make relative strength gains. Now, down here in the weakening quadrant, our former leading sectors, utilities and energy, let me zip this back to Friday again where I wrote my notes. They were exhibiting some northerly momentum gains. Okay, they had underperformed in terms of momentum, but they were still remaining in an outperforming condition in terms of relative strength. And we did get some momentum rally coming back in, but now if we add in yesterday's price action and the open just heard the bell, looks like utilities has taken another kick to the left, and so is energy. Healthcare and staples, they have underperforming momentum. Their relative strength is still holding, but their vectors are showing you the direction that they're heading. They are continuing to give up that relative strength position. Now, the industrial sector here has, Bennett's messing with my screen over there.
Sorry, Terry, I didn't realize it had dropped over there. My apologies.
I was like, wait a minute.
Yeah, where'd that come from?
Yeah, where'd that come from? Did I do something? Okay, the industrial sector very close here to the origin. I don't read a lot into it because momentum and relative strength is essentially the same as the S&P. So where the S&P goes, industrials would go too. However, we do note that we did get a kick back to the northeast last week, and we are continuing a bit of that with yesterday and today's price action. So industrials, some stocks inside the industrials look like they're willing to make a run back into the leading quadrant, and I might drill into that here. I know I will in the members webinar. We'll go through a detail on these sectors, but if I have time today, I might take a look at it for you. Now, down here in the lagging quadrant, we have the real estate sector, materials, and the communications. The communications had been holding out up here in the improving quadrant, but it just couldn't gather any kind of direction, positive direction that is. It actually now is reversed, and with this southwesterly move means it's a combination of loss of momentum and relative strength in the XLC. Currently the lowest relative strength out of all 11 sectors. Interestingly, financials is getting a kick. Financials made a turn last week, got this northeasterly vector going, has now pushed itself up into the improving quadrant. So it's the only stock here holding on to the improving quadrant right now. Now, one more thing, we could take let me go back here. We could take a quick look here at growth and value rotations. Okay, in the weekly RRG, we see that the growth sector did manage to move inside the leading quadrant, but most recently we've seen the momentum kind of roll to the south, a little bit of fade there, but it does appear that we're still continuing to gain relative strength. Now, at the same time, these basically are pairs. You could trade them opposite each other. The value shares had started to gain some momentum. We now see value pushed over into the lagging quadrant opposite of growth up here in the leading quadrant. Now, for you short-term guys that are day trading on the smaller time frame, we currently have the value sector in the leading quadrant and growth in the lagging quadrant. This rotation is moving, and you can see here in the dailies that it looks like momentum is coming back out of value for the short term and coming back into growth on the daily chart. But again, it depends upon your trading horizon, and you could even look at this on the monthly. If you're an investor, your investing horizon would show you that growth stocks are out of favor right now. So Bennett, anything else? Otherwise I'll, oh yeah, let's go ahead. I did promise, I think I've got a minute here. I'll go ahead and let's look inside this industrial sector. And Bennett, I don't know if this matches up to your wave count in the XLI or not, but this is what I'm tracking. If we do have a completion of the low back here on July 14th, we've had a nice impulsive rally all the way up to mid-August, and then we've taken a bit of correction. If this unfolds as an ABC, we should be nearing, if we're not already there, we should be nearing the completion of this wave 2 very soon. It looks like about at least a 50%, maybe a 61.8% retracement of this move right here. I will show you that the XLI has reached back into the 50-day moving average. It's trading just below it right now, but 50 is still below the 200. So that is still a little bit of a caution. At some point out here, if we got a rally back to the upside again, you might see this 50 cross the 200, and that's called the golden cross whenever that occurs. All right, let's look inside though, but I said it's the XLI overall is not really outstanding. Okay, so you've got to do, this is like the top 30 stocks. Take all the stocks that make up the sector and take a look inside to see who's got strength and who doesn't. And this looks like a jumbled mess, and that's the reason that the XLI overall is kind of hesitant. But if you look closer, recently we've had Boeing with some rapidly rising momentum up into the improving quadrant. That momentum did fade, but it didn't roll completely back to the left. It's actually moving to the southeast, which is still very positive for Boeing. Okay, at the moment, Boeing is now netted a outperforming condition in terms of relative strength and momentum. It's got 107 on momentum scale and what is it here? 101.1 on relative strength. So it is currently in an outperforming condition versus the S&P. Trane Technologies, Carrier Group, those guys are looking strong. There's many other industrials that have pushed already into the leading quadrant that are looking good, but I really like to focus more on those such as Union Pacific, CSX. Now we've got John Deere and Johnson Controls. All of these blue vectors tell me that their weekly price trend is on an improving pattern here. So again, in terms of relative to the S&P, even though these stocks are in a decline right now, their decline is less of a slope than what the S&P is, so therefore they're in an outperforming condition. Now you can see here the 20s crossed over the 50 here in John Deere back on August 5th. We did rally to a peak on August 26th, and now we're in a slight pullback, right? If this is a new impulsive run, I would be looking for, as we play the markets out, I'd be looking for re-entry opportunities. Currently, I see a bearish MACD corresponding to the corrective move that I've got played out here. I'd be looking for technicals to turn, recapture the 50-day moving average. There may be an opportunity to pick up shares of certain industrials that look to be tracking to where they want to hold the leading quadrant. So that's enough for me, Bennett. I'll give it back to you now.
Very good. Much appreciated, Terry. Yeah, looking to the industrials, I am tracking an interesting wave count in shares of Boeing that could suggest that there's a larger reversal in development there. Given that thing has been out of favor for quite some time, we're going to let that one prove itself. But excellent work there. All right, markets are trading higher this morning. We were up to 39.22, so keep in mind it is possible. Wait for it is still ongoing. All right, anything else before we let them get out of here and enjoy the rest of your day? We've got 21 minutes until our member webinar. All right.
Yeah, guys. I mean, if you want more in-depth analysis, you really need to join our subscription service. You'll get a daily dose of Bennett. Where, I mean, you think he gives you a lot of detail here on Wednesday. You just wait until you're a subscriber. You will get the complete picture every night of what's happening in the market that will help you plan your trades better, and you know, lots of interesting stuff. We got a great community too. We got a private Discord chat that we've got some highly talented traders in there that love to share their trading ideas with each other, and yeah, so we really like you guys to come join us there.
Absolutely. I would encourage you to check us out anytime, tradinganalysis.com. Give us a test drive. Members, we'll see you in about 20 minutes. If you did enjoy the content, we would ask you subscribe with notifications. Give it a thumbs up. Lets the YouTube algorithm know to distribute it accordingly. It doesn't cost you anything. It's a great way to support the Trading Analysis team. Viewers, appreciate it. We'll be back same time, same place next week. And of course, tomorrow morning, 9 a.m. Eastern for Crypto Lab with Alex. Gentlemen, appreciate it. And members, we'll see you in 20 minutes. All right. Have a good one.
See you later.
See you guys next week. Take care.